What are the types of equity mutual funds? Which equity mutual fund has higher risk? To help you get answers to such investment quests, we have our financial expert Mr. Hariharan with us. Hariharan, could you please elaborate more on this?
Now, general perception that people have is all equity funds are the same. It is not the case, right? So, what I've tried to plot here is how different categories of equity funds fare in terms of the risk versus the reward in terms of returns. So, on the extreme left, okay, we have got large cap funds. And as I talked about in one of the points earlier, large cap fund is considered to be more stable, and therefore they are more consistent, and therefore they are less volatile, and therefore they are less riskier. But at the same time, please remember they do have risk, but relatively they are low in terms of the risk. And as you go from large to large and mid, where you add the mid cap segment, your risk element increases. Then you have multi cap, which has large, mid, and small, all the three put together. Then you have dividend yield. Then you have value funds. You have ELSS fund, which is equity linked savings scheme. Then you have focus fund. Why focus fund is more aggressive, more riskier? Because it is going to invest only in 30 stocks maximum, and the concentration risk increases, isn't it? So instead of 100 rupees being split across 60, 70 companies, you're now going to split that 100 only in 30 companies. So the concentration risk increases. Therefore, the ELSS has a higher risk as compared to some of the other funds that we've discussed. Then we have mid cap, obviously, has higher risk. Small cap is more riskier than mid cap. And then on the extreme right, which is high risk, we have sectoral and thematic funds. So these are the funds which will take a bet on specific themes or sectors. For example, sector could be a pharma sector, it could be IT, it could be financial services. So you're basically betting on a few set of companies in that industry. And if that industry does not do well, you take a significant hit. Similarly, you could have themes. So a manufacturing fund is a thematic fund, right? A business cycles fund is a thematic fund. An energy fund is a thematic fund. So they are betting on certain sectors. So in a thematic fund, you will have few sectors compared to sectoral fund, which is only one sector. But relatively, thematic is less diversified as compared to a large mid, so on and so forth. Therefore, the risk element increases. And therefore, when you now select the fund, you connect everything that we have discussed so far. If you are an aggressive investor, if your investment time period is longer, more than 5 years, 10 years plus, you now can come to funds which are aggressive in nature in terms of the risk profile. Somebody wants to invest for 3 to 5 years, will have to come to a large cap fund. Somebody who's got 20 years planning for retirement can come to multi cap, can come to focus, can come to small cap, can take some exposure to sector and thematic. Again, important point, when you take exposure to thematic and sectoral fund, out of 100 rupees, you should not invest more than 15 rupees, 1 5, in sectoral or thematic funds, all put together, irrespective of how strongly you feel that sector is going to do well. Okay, it's always better to stay diversified into multi-cap, flexi-cap kind of funds, okay, rather than putting a significant amount into sectors and thematics funds. Similarly, when you look at debt mutual funds, again, the perception is debt is safe. No. Right from overnight fund, which is considered to be the safest debt mutual fund, to liquid fund, which is also relatively safer, you see that the risk element starts going up, right? And therefore, again, you connect what we discussed, your risk profiling, your time investment time horizon, your investment objectives, all of that you now club, and you figure out which are the set of schemes or debt mutual fund which is applicable for you. There are 16 categories. Not all funds are there for everybody. You'll have to pick and choose which is the one that is best suited for you. And I hope the discussion so far would have given you insights of what could be the best possible ones for you. So on the extreme right, you have something called long duration funds, extremely volatile funds. Now, these are purely dependent. So, gilt funds, gilt 10-year, dynamic bond funds, everything will be dependent on the interest rate in the market. Interest rates go up, prices will come down, they will have capital loss. On the reverse, if the interest rates cut, prices will go up, you will have capital gain like equities, right? So therefore, you'll have to be careful, mindful of which funds, which schemes to select. FlexiCap will be dependent, it's very close to multi-cap. The advantage with FlexiCap is that the fund manager can shift between large, mid, and small, right? So he has that flexibility to move between large, mid, small. Multi-cap, compulsorily the fund manager has to put 25, 25, 25 in large, mid, and small, and he has to maintain that minimum percentage. FlexiCap gives the flexibility, and therefore, relatively, I would say it is less riskier even than a focus fund, because focus is the biggest risk that focus fund faces is concentration risk, that I am putting only in 20, 30 stocks at best. And even if 3, 4 stocks don't do well, I am taking a hit of 10, 12% straight away, right? Value category, value funds are funds which will try to identify companies which are undervalued. So let me try and explain this with a cricket example, IPL example here. So if you recollect 2000, I don't recollect the exact year, I think 2014 or 15 it was, Yuvraj Singh was the most paid player in one of the years. I think he was paid some 12 crores or 14 crores. And that year, when he was paid that much amount, he did not perform. Okay. And the immediate next year, when he went for bidding again, so every player has to put a base price. So Yuvraj Singh had a base price of 2 crores. And after that, the bidding is done. So you get sold at 2 crores, you could get sold at 4 crores, 10 crores, 14 crores. The immediate next year, after he was paid the maximum, he did not perform. In the first round of bidding, nobody picked him. And he had put a base price of 2 crores. The second round of bidding happened is when one of the franchise picked him up for exactly 2 crores. The same price at what he quoted as. Now, if I were to ask you, is Yuvraj Singh ideally priced at 2 crores or more than 2 crores? The answer would be more than 2 crores, because we know what has been his track record in T20s. But a player like Yuvraj, who is a good player, that year got sold at a base price of 2 crores, which means a good quality player is available at a lower price and I buy him. That's called value strategy. So what the fund manager tries to do here is identify companies which are trading currently below their fair value or intrinsic value. So every company, there's a valuation done, there's a stock price valuation done to figure out what is the right fair price or intrinsic value of that stock. So let's hypothetically assume that the intrinsic value of the stock is 100 rupees. But for some reason, that stock is today available at 80 rupees. The fund manager will go and pick that company. He will invest in that company. That's the value style. And now he's not playing in IPL. He's retired. Okay, so I hope the example is clear. I hope the value category is clear. Yogeshwarji, is it clear? Yeah, so I'll try and take some of the questions later, because I just saw the chat, so I thought something which is relevant, I will just pick it up. Okay, so essentially we have now discussed that there are these parameters, and how people will try to so learning. So basically, you're talking of ninth house, which is the house of knowledge, house of learning. So how people will learn. So again, some quick examples from astrology. If you've got sun in the ninth house, okay, sun in the ninth house, such people will have a very strong sense of purpose in terms of learning, the ability to learn, acquire more knowledge, and therefore they will explore mutual fund categories with a lot of vigor. And they will try to seek investment opportunities that also sort of resonate with their personal beliefs or value systems. And people who have got sun in the ninth house might also be drawn to mutual funds that have international market exposures. So those funds which invest in global stocks or the global ETF, such people who have got sun in the ninth house will typically tend to invest in those kind of funds. They will try to explore those kind of funds. Okay. On the other hand, if you've got Mercury in the 9th house, Mercury is associated with thinking, rationality. These are people who will do a lot of analysis. They will analyze market trends. They will analyze various economic parameters, and they will seek funds accordingly. Just to give you sort of a context here, I talked about the debt funds, and I said that debt funds is a factor of some of the funds are a factor of the interest rate. So today, people have got some Mercury in the 9th house. What they will do, they will now analyze the current market scenario. They will say that interest rates in India have peaked. Globally, also interest rates have peaked. US Fed has said that they will cut rates sometime, maybe the next quarter. RBI has also said that we will also cut rate. We will not increase the rate. We will also somewhere start cutting the rates in this year. So, person who has got Mercury in the 9th house will start evaluating and say that, hey, this is a good time for me to get into a long duration debt mutual fund or get into a gilt fund, because as I said, when interest rates are cut, the prices will go up, and these funds have what we call as a modified duration, which is very high. So the impact is significant on the positive side. They will make a lot of capital appreciation. Okay, so people who have got Mercury will try to do such kind of analysis. They will figure out what the economy is doing, so on and so forth, and then try to seek which are the funds that are best suited at this point in time. On the other hand, if you got Venus in the 9th house, now Venus is associated with beauty and art, something very interesting. So what investors who got Venus in the 9th house will typically tend to do is they will try to, the funds, certain funds will attract them, which has got a very aesthetic appeal. So as I talked about thematic funds, so a nice thematic fund, nice theme like an energy fund might suddenly attract them, and such people have a tendency to invest in those kind of funds. They also get attracted to funds, which generally tend to do well on certain socio parameters, environmental parameters, governance parameters. So we call these as ESG funds: environment, social, and governance. So there are funds available today which is called ESG funds. So people who have got Venus in the 9th house will typically tend to look at investing in ESG kind of funds. ESG fund people generally don't invest, but people in having Venus in the 9th house might have an inclination to do that. Mars again represents ambition, assertiveness, drive, and therefore they will tend to analyze funds, which are high risk, high reward funds. So a small cap fund, a sectoral thematic funds is what they will generally tend to look at, right?
Thanks for your detailed answer. If you have any doubt regarding this or any other financial or investment decision, don't hesitate to book an appointment with our financial expert. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like, and if you are new to our channel, please do subscribe.